Good evening, everyone. Well, I am super excited. I'm super pumped. I've just got back from an incredible trip around America. And yep, we did a lot of traveling. I will explain it to you, and not much sleep. But to be fair, what I saw in all my years of experience, and I bought my first house when I was 22. I actually did my first development at the age of 19. So I've been in the property game quite a long time, and I haven't seen opportunities like I've seen in America. I saw blips in the UK for about 6 months, from October 2008 to about April, May of 2009, when developers got really, really nervous very, very quickly and gave quite significant discounts, but nothing to the scale that we're seeing in America. So without further ado, what I'm going to do tonight is I want to share with you what we found. In Let's Talk Property, we are going to discuss understanding the American property market and the greatest wealth transfer ever. But before we get started, I've got a question for you. What do you think? What do you think is actually happening out there in the States? Which one appeals to you? Is America in trouble and I'm too afraid to invest there? I've heard horror stories. What about I need to know more, but I'm interested? What about I like a deal and I've heard there are great deals in America. I'm just not sure what to do. I'm all about yields, and if I can get confidence in the income, then I'm happy to commit. And lastly, I understand the fundamentals, know this is one of the best opportunities of our lifetime, and I want to take advantage of the greatest wealth transfer ever. Now, as a matter of interest, which one appeals to you? Let's run a quick poll and actually see who here is paying attention, firstly, and secondly, which one appeals to you? Which of those 5 categories are you sitting here tonight and thinking, yep, that's the one for me, basically? So I can see everyone is bringing in. I'll just leave it for a bit longer. 50% of the people have voted. Those 50% that haven't voted, we know who you are. No, it's all good. Keep the votes coming. We're up to 75%, which is great. 80% have voted, so keep them coming, keep them coming. Which one appeals to you? And it's actually very interesting so far. We've got a very split and even between them. So we're nearly there. We're up to 90%. Let's give you another 5 seconds or so, and then I will close the poll and share it with you. Okay. I think that's enough. So let's close this poll, and let's close it. And let's share it quickly. So you should be able to see the results now. 33% of people want to know more information. 22% like a deal and know that there's deals out there and are interested. 22% are completely focused on the yield, and as long as they can get confidence in the yield. And 22% of people know that there's a fantastic opportunity in America and they want to take advantage of it. So that's a bit of interesting information to see not only where you sit, but where others sit. But what about the greatest investor of the last century? What about the Oracle of Omaha, Warren Buffett? While I was in the States recently, I found out about this, and Warren Buffett was actually quoted as saying, along with equities, single-family homes in America are very attractive investments right now. He was appearing live on CNBC on the 22nd of February 2012. So this is very up-to-date information. And Buffett told the reporter that he'd buy a couple of 100,000 single-family homes if it was practical to do so. Now, very importantly there, notice the single-family homes, and I will come back to this later on when we're actually talking about what are the better opportunities in America. He said if you hold them for a long period of time and purchase them at low rates, American homes are even better than stocks. Now, I personally never thought I would hear the day when Warren Buffett would say that houses are better than stocks. This is a man that still lives in the same house that he bought when he was 30 years old for $35,000. He's never upgraded, and his logic is that he never wanted to spend any money on a house because it meant he was going to lose too much money in the stock market. And yet, at the age of 81, Warren Buffett is now turning around and saying that based on what has happened in America, U.S. houses are even better than stocks. As a complete side note, If you haven't read this book, The Snowball by Warren Buffett, I would highly, highly, highly recommend it. It's basically an autobiography of Warren Buffett. It's all about creating wealth and how he did it. He literally bought his first share at the age of 4. He bought his first farm at the age of 13. So this is a man you can learn from. And the whole principle of snowball is how to create wealth. And he describes it like a snowball. It starts small, and ultimately you just do the right things. The momentum grows, and after time the snowball grows and grows and grows, and you create more and more wealth. And here's a man who at the age of 81 is telling us that American property is something that you should be looking at the moment. Now, the counter side to that argument is that we're dealing with a lot of uncertainty at the moment. There's a huge amount of uncertainty. We're not sure what's happening in the world markets. We're not sure what's happening with Europe. We're not sure what's happening with the federal governments, with the banks, with the reserve banks. We're not sure with the political, the micro, the macro. It is changing so much. And in fact, the only certainty that we can be certain of is that there will be uncertainty. Now, a good friend of mine and a mentor of mine who unfortunately has passed away, but he was the editor of the property section of the Financial Mail. His name was Ian Fife, and I asked him the question about 2 years ago, so still right in the heart of the global financial crisis, about 2010. And I said, how do you deal with uncertainty? And he said, through knowledge, by concentrating on the actual realities of the market we operate in. An index is a theoretical figure. A transaction is a concrete and specific. If you know how property actually works, we know that it remains the biggest store of wealth in the world for the ordinary people. That is so because it remains the most predictable and conservative of asset classes, and it is more often than not a home too. And this is coming from a gentleman who at the age of 67, when unfortunately passed away, was hugely wealthy through asset accumulation and through property. And property was his game, and how he actually did it. And I think in essence what is so important is that you can get blinded by the press. You can get blinded by the numbers. You've got to understand what is happening on the ground. And most importantly, you've got to look at independent investments and make a decision as to whether they make sense or not. I want to give you a quick example. I own a house, a 5-bedroom house in Wimbledon. And to be fair, over the last 2-3 years with the global financial crisis, we've probably lost about £100,000 in asset value. I actually don't know. And to be honest, I don't care. Because what I'm most focused on is the income. And the income, the yield is strong. The interest rates have actually dropped dramatically. And so my passive income, my positive cash flow has actually expanded dramatically. And so my logic is, long may the global financial crisis last. The longer it lasts, the happier I'll be, because I've got a beautiful passive income. And that is a classic example. You know, back in 2002, when I bought that house, all my friends told me, we just had September the 11th, they were going to war with Afghanistan, and everyone told me oil prices are going to go up, inflation's going to go up, the economy is going to be in the doldrums, we've just had the IT crash, and I said, yes, people, but we're buying a 3-bedroom home that I can renovate. I can put 2 extra bedrooms on, and I can rent it out to South African expats. And you know that more than 10 years later, that property's never stood vacant, not for one day, and it's been positive cash flow from day one. That's my logic. That's the basis that I'm coming from in terms of my own personal experience and what I wanted to share with you when it comes to America. Now, as a matter of interest, why did I go to America? Well, based on the fact that you need knowledge and you need to explore the independent realities of each investment. So, myself and 2 gentlemen, a gentleman by the name of Neil Peterson, he's the editor and owner of Real Estate Investor magazine. It's the big red magazine that you see, and it's the leading magazine in this country for property investments. And Neil basically wanted to come to America for the same reason I wanted to go to America. We all know that the world global financial crisis started in America. It started with the subprime crisis. We're not sure if it's going to end if America recovers. But the bottom line is it started in America, and any savvy, sophisticated investor needs to understand what is happening in America so that they can make educated and informed decisions about the other investments around the world. The other gentleman, I'm going to speak about him a little bit later, but a friend of mine, Brendan Brown, he went with me. So the 3 of us flew over to America. We did 8 cities in 11 days. We literally spent more than 90 hours on an airplane. That's 3 3/4 days, ladies and gentlemen, on an airplane. We traveled 38,925 kilometers. And just to put that in perspective, that is if you drive literally 31 times between Joburg and Cape Town. Now, as an example, just to give you an idea, this is the journey we took. So you can see there, we flew from Cape Town to Johannesburg. Whoa, the Earth's spinning too fast. Now, in terms of where we are with America, how do I spin this around a little bit? I just want to... Okay, so we flew into New York. This is New York over here. I then flew up to Boston. I flew to Chicago. I flew across to San Diego. I flew into Phoenix. That over there is Las Vegas. I then flew to Atlanta. We had to, due to flights, fly back to Memphis. From Memphis, we flew to Orlando. And for Orlando, we flew back to New York. And New York, we flew home. So hopefully it gives you a very good perspective on where we went and the type of distances that we traveled. But the question is, why did we do it? And the real answer is that, as I said to you, the global financial crisis started in America. And I, as a savvy investor, want to understand why it started, and I also want to understand what I can do in terms of where we're going. I want to understand the American market. I want to understand the American economy so that I can make wise and educated and informed decisions going forward in terms of where we actually are. Why it started, and I also want to understand, sorry, just give me 2 seconds. I just need to, what I can, just give me 2 seconds there. We've got some feedback coming through from someone. I just need to switch them off. Boom, boom, boom. Okay, so, come on, man. The second reason for me is opportunity and crisis. Now, there's a Chinese saying that whenever there is crisis, there is also opportunity. And we all know, we've all heard the stories about the dramatic crashes and what's happening in the American market. And for me, you know, in amongst all that crisis, there's also opportunity. However, in 2010, I decided to fly over to America to check it out for the same reason. I knew there was crisis. I flew then, I spent 3.5 weeks in the market. I actually went to a presentation in Johannesburg, and there was a very good presentation put on by a company, and they had properties that were selling for $120,000 4 or 5 years ago that they were now selling for $40,000. They were going to sell them to blue-collar workers. There was a FedEx plant being put in. It was all the boxes that I like to hear. But in true essence, we never ever invest in anything unless I've either seen it myself. I don't invest in it for myself or for our clients, basically. We have to see it, or we have to have partners on the ground we trust. So I got an airplane, I flew over there, and I went to a place called Tampa. Now, Tampa's down here in this bottom corner of Florida. They told me to fly to Tampa. I got in a car, and they drove me all the way to over here. Now, just to put that in perspective, I got in a car at 9 a.m. in the morning, and I got there at 6 p.m. in the evening. 6 p.m., ladies and gentlemen. I was so frustrated, you have no idea. It's like getting in a car in Johannesburg and being driven to Port Shepstone. And to be honest, when I got there, there was a big fanfare because they thought this stupid South African was going to buy and sell to his clients. But when they went off, I spoke to the agent, and the agent told me there were 126 properties that were unsold. They hadn't sold a property in over 12 months, and they hadn't rented a property in over 11 months. And with that, I literally put my tail between my legs, got on an airplane, and flew back to South Africa, because I decided that in amongst that opportunity, there was too much chaos, there was too much risk, and that the people on the ground couldn't be trusted because they would literally sell their sister to be able to try and make a sale in terms of where they actually were. However, 2 years later, I basically became friends with a guy by the name of Brendan Brown, and Brendan and his wife Linda bought a property in Orlando in the middle of last year. So I've been very nervous about the American market and the oversupply and the lack of tenants and everything else. But obviously, Brendan told me he was going to do it. So I kept an eye on the process and asked him questions on numerous bases. The numbers looked hell of a good. But at the end of the day, numbers mean nothing unless you get a tenant. And to be fair, he bought the property. It was a lot more difficult, I think, than he thought it was. He had to put in over 12 different offers and only finally got accepted on the 12th one. Anyway, he bought one, and it took him a good 2 or 3 months to rent the property. It took a bit of time, but to be fair, he eventually got the property. It's now nicely cash flow positive, and on the back of that, I was like, right, this is something we need to look at, because not only on the back of that, the rand also lost 20% since the time he's bought it. And so he basically took a mortgage out on his South African property and bought the property over there in America. And his yield has just increased by 20% because he's getting paid in American dollars. So that was another big reason that I went to America. And then based on that, there's a company that I've been working with for a long time. I've been working with them in England, and we've worked together since 2005. And interesting enough, when we were selling South African property in England in 2005, I went to about 20 UK companies. And I said, look, do you want to sell Cape Town? It's a beautiful place, blah, blah, blah. And 20 companies all said, yes, yes, happily to sell. But only one person, Rod Thomas, said, I only sell stuff unless I see it. Are you going to fly out on Friday to Cape Town with me? And to be honest, it was a massive ask for me to jump on an airplane. I just started my company to do an international flight, but I did. And since that day, I've trusted and respected Rod because of what he's doing. He's been in America for 6 years, and I actually asked Rod, I phoned him up and said, listen, what type of numbers are you talking about? And over the last 6 years, they've helped 1,100 people invest. They've got an average yield of 21.1% across their portfolio and vacancies of less than 3 weeks. And on the back of that, I decided it was time to go to America, to undertake Project Discover America, and to find the knowledge that I needed to know with regards to America. Now, you need to understand how big America actually is. Do you know that Cape Town is what we would call an MSA, or Metropolitan Statistical Area? In America, there are over 300. California alone, this little state down on the left-hand side here, is the 7th biggest economy in the world. So there's no such thing as an American market. There's no such thing as a good product or a bad product for the whole market. And there's certainly no such thing as the right partner necessarily for the entire market. And that is why I endeavored with Neil and with Brendan to get on an airplane to absolutely kill ourselves in terms of our travel plans, but to see as much of the country as possible, to meet as many partners as possible so that we could understand the good, the bad, and the ugly. And tonight, that is why we're here, to share with you what we found. So, just quickly, what actually happened in America? What caused the subprime crisis? Well, it was what they call reset mortgages. What used to happen is they used to give out dingy loans, so basically, or ninja loans, basically no income, no job, no assets. I've asked many people, they've looked me in the face and they said, listen, in 2006, 2007, all you needed to get a mortgage was to have a heartbeat or to have a mirror, and if the mirror fogged up because you breathed, they would give you a mortgage. It is unbelievable. In fact, someone I met in America now on the last trip, we've just been there now, they said they actually came up with a new principle where if your mortgage was normally $2,000 a month, you could tell the bank how much you wanted to pay. You could make it any amount you wanted, and then they would just put it on the end of the payment. So you can imagine with that type of freedom and flexibility and chaos, to be fair. And then what they did is they had very, very cheap mortgages with what they called reset mortgages. And people were on 2- and 3-year fixes. And they would say to their mortgage broker, well, what happens when I get to the end of the fix? And the mortgage broker would say, oh, no worries, sir. All you'll do is remortgage again. But unfortunately what happened is when the world started to change in America at the end of 2006, 2007, the banks didn't start granting reset mortgages. The mortgage market started to dry up, and these reset mortgages started to come to terms. And people's interest rates would go from 2 and 3% to 8, 9, and 10%, and sometimes more. And this purple graph here are these reset mortgages. And this was the cause of the subprime crisis. This here was actually Lehman Brothers going tits. And interestingly enough, we're no longer here because we're not in 2011. We've moved well into 2012. But interesting enough, this light blue line is the securitized debt, the amortized securitized debt for commercial property. They tended to be on longer fixes. And although there's over $1 trillion worth of mortgage-backed securities in commercial property, a lot of those shopping centers are empty. A lot of those tenants have left or are not getting the returns. And so the income on the property, the yields, has dropped dramatically. And because of that, using cap rates, etc., the values on the commercial properties have dropped significantly. And when they come to remortgage, they're also going to struggle. And the government's doing everything in its power to not let the commercial market cause the same chaos that the residential market caused. The next thing was to just explain what happened with the market. Here you can see it peaking in 2006 and literally dipping in 2009. But what's interesting is that the market has bumped along the bottom. It hits another trough in literally 2011, and when we were there now, we're just starting to see the market sort of starting to uptick. So you can see over here, it's sort of going and it's just starting to uptick. But to be honest, every single person we spoke to said to us that, you know, the market wasn't going to improve until the banks started lending. The market wasn't going to improve until the average gentleman or lady, the average American, could borrow money in terms of where they actually were. So I've got a question here from Teresa, and she said, please explain the greatest transfer of wealth in history. Teresa, I certainly will, and I'm going to cover it today. Yaku, I hope that you can hear us. I don't have any other complaints coming through from anyone else, so I hope that my sound is coming through clearly for you all. Okay, so my question is, why do I agree with what Warren Buffett said? And most importantly, why was I extremely impressed by what I found in the market? For me, there's actually three things. There's the story, there's the timing, and they're the partners. Now, I need to go into these in more detail because it's very important. So firstly, in terms of the story, literally, the most important thing is the economy. What is happening in the economy? We went over there. I've got numerous newspaper reports, but from all intents and purposes, there's positivity in the market. People feel that the market is turning around. Employment is on the up. The economy is improving. People are optimistic about the future in terms of where it's actually going. And I mean, we've got personal examples. We literally in Orlando on a Monday night at 6:30 went to a restaurant to try and eat. And it was just a normal restaurant. It wasn't in the middle of Disney World or anything, just a normal restaurant in Disney World. In Orlando. And we had to wait for half an hour. On a Monday night, it's a very good sign of the economy in terms of what's happening and where things are going. So you can see on the right-hand side, this was actually in the Wall Street news, and it was, where's the recovery going? And you could see here on a barometer, and they said that it was already, the revs and the barometer were starting to uptick. But a lot of it's going to depend on Washington. A lot of it's going to depend on the elections and where it's going. This was USA Today, and there was optimism showed in the survey on the economy, and there's a whole lot of talk from the economists about how the majority of economists are now in a positive framework in terms of where the economy is going and what is going to happen. The second part of the story that I think is most important is that across the whole of America, the average house price drop is 35%. 35% drop in prices. Now you imagine you bought a house for R1 million and today it was worth 650,000 Rand. It is a massive, massive dent and a massive psychological blow. Almost every American that we met had lost their shirts in the last 2 to 4 years. Almost every American that we met had been repossessed of a house. Most of them had gone bankrupt. You know, granted, we were meeting people in the property industry, but it doesn't matter. And you can imagine the psychological effect that this has had on the market. And you can imagine what happened to the market. It literally came to a standstill. Mortgage brokers went out of business, real estate agents, developers, lawyers, anyone that touched the real estate industry went out of business because of this massive drop in property prices. The third thing for me that is very important is the replacement value. You know, at the end of the day, people talk about where property prices were in 2007 and whether they're going to be able to recover. And there's a lot of pundits out there that say, oh, well, the price was 100,000 in 2007 and it's 50,000 now, so it's just by choice. We know that it's definitely going to double up. But at the end of the day, no one can ever guarantee capital growth. But what is very important is what is the replacement value. Now, depending on where you are in the country, the replacement value to actually rebuild a house is anything from $80 to about $200, depending on where you are. So $80 in places like Atlanta, up to $200 in places like New York. And interestingly enough, if you take the replacement value, the current values of properties are between 40 and 60% of replacement value. And that, for me, is a significant number because you cannot build that property for even half of what you can buy it for at the moment. The fourth one for me is property fundamentals. If you've ever been on a webinar or ever listened to anything that I've talked or any seminars that I've done, it's all about the property fundamentals. You don't get caught up in the hype. You understand what is happening in the property fundamentals. You understand what is happening with regard to the rent and what is happening with regards to the supply and demand. Now, the biggest lesson that I learned in the global financial crisis is that those people that focus on income have come sailing through the global financial crisis. It doesn't matter whether they're individual investors that literally own one property or whether they're the biggest property funds in the world. Those people that focus on income and yield have ridden the global financial crisis and in many instances are actually more well off today than they were 3 years ago. However, those people that focused on capital growth have been wiped out. Again, whether they're the one-man band or the biggest global property funds, they have been wiped out, the people that focused on capital growth. So the property fundamentals are: where is the rent? Who are the tenants? What is the rental demand? And for me, what I found of huge value when I was in America is that more than 50% of Americans are now renting. More than 50%. Most of them have lost their home and been repossessed. And even if they could afford to buy another home, the psychological damage of being repossessed and losing 35, 50% of the value of their property, they do not want to touch property, but they still have to live somewhere. And so they are your tenants. And the second thing is that the banks are not lending. There is virtually no lending going on to the average American. And because of that, once again, even if they can get over the psychological barriers, they still have to go out and try and get finance, and they can't, so they become tenants. And that for me was very, very significant with regards to the rental demand. The second thing was supply and demand. Do you know what caused the global financial crisis in America was oversupply? In 2004, 1 in 4 homes, so every 1 in 4 homes that was built, one of them stood empty. If we'd known that in 2004, we would have known that this market was going to implode. It was common sense. Over 10 million homes were oversupplied by the time we got to the GFC 2007, 2008. But what's very interesting is the population has continued to grow. Supply has completely dried up. In fact, a lot of the properties have been repossessed by the banks, and they talk about it as shadow inventory, where the banks have been holding the properties back. And because of that, not only because of local investment, but also because of international investment into America, there's significant demand and there's not enough supply. And I'm going to go into that in a little bit more detail and show you what is actually happening in the press. But most importantly, the fundamentals of supply and demand were out of kilter. It is what caused the global financial crisis along with reckless lending. But they're now in kilter, and I've got a graph to show you and to prove that. So, just in terms of where we are, in terms of the actual fundamentals, here you can see inflation, literally from 1970 all the way through to 2010 and beyond. And you can see here, as inflation adjusted house prices, then bouncing along, and then suddenly a huge spike when George Bush was in power, and he said that everyone in America, home ownership went right up to 69%. Everyone in America must own a home. Whether they've got a job or not, it's irrelevant. Lend them money. We don't care. And there was a huge boom. But then we all know what happened, and it came crashing back down. But when you look at the long-term trend analysis, you can see that that graph is back in equilibrium. When you look at nominal house prices, again, you can see the growth, but you can see the drop. And again, you can see that it's back in equilibrium in terms of where we actually are. The second graph that I think is very important is the house price index with both the boom and the bust, and then the rental index. So anyone that is a sophisticated investor knows that you price property based on the income that you can earn, whether it's a residential property or whether it's a commercial property. It's a yield or a cap rate. It doesn't matter. You should be pricing the property based on the yield. And based on the yield, you can see the long-term trend analysis here. And then you can see prices and how they've gone over and under, but how they've vastly spiked. But now prices are back in equilibrium with the long-term trends of the yield or the cap rate, basically the income that you should be getting from your property in terms of where you are. So those are the 3 reasons why I that is the story of why I am so excited in terms of the property. But the thing that blew me away was actually looking at the examples. Now, let's take a look at this. And really, I would love some comments here. Please fire through your questions in terms of where you actually are. Because for me, this really is just absolutely astounding. And I really want to let you know. Gregory's asked, will you share the presentation? If so, I can stop taking notes. Gregory, I'll put it on SlideShare for you if you want me to. But I would still take notes. It's a well-known fact that if you take action and write it down, you will not just be sitting there passively. You'll take this in. There's a 97% better chance that you'll take action and that you will ultimately get the wealth that you are looking to achieve. So if I was you, Gregory, I would still take notes because it'll keep you a lot more alert in terms of where you are. But let's get on to these examples. Ladies and gentlemen, look at these examples. And please, I really, really would like your comments here. How much do you think this house should cost? It's a 3-bedroom house. It's in Atlanta. You can see it's an existing house. It's in fair enough wear and tear, nothing too wrong with it. How much would you be willing to pay for this house in dollar terms? Come on, let me know. I'd love to get your feedback. So Yaku has said $24,000. That's interesting, Yaku. Anyone else? I guess in rands, average in an average suburb, 1.5 million. Ashraf would happily pay $100,000. Anyone else quickly before I give away the secret? Depends on the return. Okay, interesting. Mark, good comment. So Philippa says depends on where it is, location. Perfect. So Philippa, let's just say that it's in an average location. But interesting enough, depending on the return, and Mark, I'd be interested to see what you'd be prepared to pay for it. This particular property is renting for anywhere between $800 to $950, and it's currently appraised at $40,000. So currently the valuation, current market, not yesterday, not 5 years ago, today is $40,000. The day I was there with my partner, and I'll go into more information, he was going to pick this up at an REO, which is a real estate owner-occupied, which is basically where the banks have repossessed the property, and he was going to pick it up for $23,000. We were probably going to have to spend about $7,000 or $8,000 renovating it, so you probably all-in costs of about $30,000. The current market value is $40,000, and most importantly, the rent, even conservatively, is $800 per month. What about this property? We're not going to play this game each and every time. This here is a 4-bedroom home in a nice area. It's in a big estate. It's got a beautiful lake with facilities and tennis courts and a gym and a clubhouse and everything else. The purchase price, $86,000. The rent, $1,350 per month. The appraised value today is $115,000, and it was sold in 2006 for $200,000. So this again was an REO. It was coming up for auction. We were there on the Saturday. It was coming up for auction on the Tuesday, and the gentleman had actually already bought it pre-auction for $86,000 in terms of where he actually is. Now, Mark has asked, are there bricks or is it just timber and cardboard? So Mark, in America, in the same way as in Australia, they've got a very sophisticated way of construction. Most of it is built out of timber tile with brick cladding in terms of where you're looking at. And you do get brick houses as well, but the norm is timber tile and brick cladding in terms of what you're looking at. Pana G. Gotius, sorry, I apologize for the pronunciation. I believe there's a big difference in price build between wood and houses built from bricks. That's fair enough again, but to be fair, it's not the way. It's not the norm. All the houses are built out of this. The fanciest houses in America are built out of the same way. This is the way that it works. Now, just because we used to brick here doesn't mean, you know, as an investor, you can't focus on what works in Johannesburg or in Cape Town. It's not relevant. You've got to focus on what works overseas. You've got to focus on what your buyers want and what your tenants want in those markets. And most importantly, you've got to focus on the numbers, the cash flows, the costs. Ashraf said, recap REO purchase price, please. So basically, it's the auction price, Ashraf, in terms of what you're buying at, in terms of where you are. Mark said that is a great return, double what you would get normally in South Africa. 100% Mark, I'm going to show you something. Cornel said, what is the running costs and maintenance on these houses? Taxes. Cornel, I'm going to be able to give you a full cash flow. I just want to give you an example of a couple of properties, but I completely agree with you. Everything for me is about the cash flow and the maintenance and everything else, and I've got everything for you. I'm a numbers guy. Look, granted, I think the pictures are awesome, but the numbers are much more important. This particular property, you'll see here, it's just literally finished. It was bought about 2-3 weeks ago. It's been renovated. Now, you'll be blown away. Property in America takes between 4 days and 2 weeks to transfer. There's none of the shit like in South Africa, England, and Australia where it takes 3 months to transfer a property. 4 days, ladies and gentlemen. You've got to have the money. It literally transfers, job done. The renovation team's in there. 2-3 weeks later, renovation's done. Boom, tenant can move in. And this was a house. There's actually RJ there. This was a house here. It's a 4-bedroom house. He purchased it for $103,000. The current rent is $1,200. It's appraised in today's market value at $120,000, and this property is actually available I don't know if it's still available, but it was available a week ago when we were there in terms of where it is and what it's looking at in terms of what is actually happening. And again, I've got all the cash flows in detail, but I just wanted to give you an idea of what's available. This house I absolutely loved. Take a look at this house, and particularly for Mark. You know, you've already started doing comparisons between South Africa and Johannesburg. Sorry, Johannesburg, South Africa, and America. Take a look at this house. In South Africa, a 5-bedroom house, and I did the analysis on private property. You cannot pick up a 5-bedroom house in even an average area in Johannesburg. Forget Cape Town, because Cape Town's expensive. In Johannesburg, you can't find a 5-bedroom house for less than R1 million. And yet, look at the quality of the house. Look at the size of the house. And this 5-bedroom house, the purchase price that literally in the last couple of weeks that someone bought this house for is $135,000. The rent that they're getting is $1,500 per month. It was sold in 2007 for $250,000. And the replacement value today, just based on the size, if that house burned to the ground, the replacement value would be $240,000. Now, just to put that in perspective, $135,000 is a little bit around. It's basically R1 million. It's R1 million, ladies and gentlemen. Could you get a house like that in South Africa for R1 million? That's my question, and that's what got me excited in terms of where we are. That was in Atlanta. We then went to Memphis. Memphis is a completely different market. And to be honest, tonight there's not enough time to share with you all the different areas, the pros and the cons. I'm going to put a full market report together so that you can understand the pros and the cons of every area. I'll probably do another webinar as well so that you can understand them. But I just wanted to explain to you the types of values. Take a look at this stone brick house. So for Mark and those people that are worried about wood, you don't have to worry, because here's a stone brick house for you. It's in Memphis, Tennessee. This is a 3-bedroom, 1-bathroom house. The purchase price, $29,000. The current rent, $700, and it was appraised in today's market at $52,000. Now, for those people that wanted to look at cash flows, let's look at a quick cash flow. And this is just for one house, just to get an idea. The purchase price, $29,000. The closing costs, $920. The insurance, so the first year's premium, $112. The current market value, $52,000. The gross annual rent, $9,300. The gross cash on cash, 32%. The net rental, so that's after management and maintenance and everything, $6,568. The net cash on cash, 23% return. After 2 years, the expected, based on current market valuations, the expected exit will be about $65,000. The profit, $36,000. The return on investment, 125%. Some pretty interesting numbers. They certainly got my attention in terms of where we are. Cornel said, how much tenant demand is there in Memphis? Very good question, Cornel, in terms of where you are. Interestingly enough, Memphis tends to be a blue-collar environment. They've got a huge FedEx plant there. They've got the Nike, a massive Nike factory. And so those are the tenants that you are seeking. The management agent that we are working with is so confident that they've actually put a rental guarantee, and they're looking at a gross yield of around 20%. So gross yield of around 20%. So you don't actually have to worry so much about the tenant demand because they've got a rental guarantee in place. And the reason that he can do it is because he's actually, in his mind, he's renting it out for higher than that, and so it will be swings and balances in terms of where they are. The rental guarantee is for, I need to double check, and I'm sorry, I've got so much information in my head, but certainly for 1 year, it might be a 2-year rental guarantee in terms of where they are. But the important thing is, and I actually did research, and it's funny you asked me that, Cornel. I got hold of my partner, Rod, and he's helped 172 people invest in Memphis in the last 8 months. And I wrote an email last night, and I said, can you please give me the statistics of all 172 investors? What were their yields? What were their vacancies? So don't you worry, Cornel. I'm doing my due diligence just as much as you are. And the nice thing is the partners I'm dealing with have track record so that I can actually see. I can see the actuals. I can manage the actuals in terms of where they actually are. You can actually see over here, this is one of our partners. This guy over here is Charles. I'm going to, Charles is a guy that goes in, he finds these properties on auction, and then he renovates them. He's got a full turnkey solution, and then I as an investor can buy it and rent that property out. And interesting enough, Charles actually played quarterback for Memphis, Tennessee, and in those days, Elvis Presley was best, loved his American football, and Charles and Elvis were best mates. They spent a lot of time at Elvis's house, and so pretty interesting fellow, and we got the privilege of spending a day with him. He's got a huge empire. He owns over 350 properties himself. It's probably one of the reasons that he drives such a nice big fancy car. But this was another property here. This was a 3-bedroom, 2-bathroom. The purchase price $39,000. The rent $800 a month. Appraised now at $65,000 and sold in 2007 for $85,000. So it just gives you a good indication of the type of properties that are actually available. And then Orlando. Orlando is Disney World. Orlando is the #1 tourist destination in the world. Over 50 million people come to Orlando to Disney World, come through Orlando Airport to come to Disney World every single year. Disney World and SeaWorld and Universal Studios employ over 100,000 people. And do you know that they've never had less than 100,000 people through the gate at Disney World per day ever since the day it opened? So yes, we've had a global financial crisis. Yes, tourism has taken a hit, but the places like Disney World have still continued to thrive. On top of that, you've got the baby boom generation. The baby boom generation, there's 78 million of them in America that are hitting, they're now 50 plus. The very last year that the baby boom generation turned 50 was last year. 10,000 baby boomers are going on retirement every single day. And those people are tired of living up around, in the Northeast, around Detroit and New York and Chicago and these cold places where they've got to deal with snow and also heavy tax burdens. So they move down to places like Orlando. They call them the snowbirds. They move to Orlando where it's sun, it's hot, there's good lifestyle, there's no income tax, or the taxes burden is much, much lower, so they can enjoy their retirement. And they are moving to places like Orlando, to Phoenix, to Arizona in their absolute droves because there's a much better quality of life. And they too are your tenants, and they too are the ones that are propping up the market in terms of where they are. Mark says, where 2007 prices, not inflated prices, boom prices. In other words, are current prices not rather normal compared to 2007 prices? 100%, Mark. And I said that to you earlier. I'm not interested in what the 2007 prices are. I'm interested in what the replacement value is, on what today's current appraisal value is, and on what the rental is, because the rental should determine the value in terms of where you are. However, it still interests me what the prices were in 2007, and I'm just letting you know about it. Neil says, what about typhoons in Orlando in terms of where you are? Yep, it is part of the typhoon area. They are built, and funny enough, they had a very bad typhoon in 1992, I think it was, and because of that, they changed the entire building code in America, but specifically in Florida. And with that, they've got a huge amount more in terms of protection, in terms of the properties, and also they've got insurance to cover the properties in terms of where they actually are. Cornel said, what properties are these baby boomers looking for? Single family homes or duplexes, complexes? Great question, Cornel, and you beat me to it. They are looking for community living. They are looking for what they call condos. They're tired of living in big houses with maintenance and having to mow the lawn themselves. They want to live in condos, just like this picture in front of you. It's an estate. It's a beautiful estate. It's literally in an area which is 5 minutes from the center of Orlando. It's a place called Millennia area. Now, interesting enough, Neil, Brendan, and I went out there on Monday night. That's actually where the restaurant was that was full. We also went to the nightclub, the Tiger Woods. The infamous Tiger Woods used to use as his hunting ground, which was very, very interesting. But that's the center. It's the center of Orlando. And this development is literally 5 minutes from the center of Orlando. You're picking up a 2-bed, 2-bath here, 847 square feet, so roughly about 85 square meters. Purchase price $70,000. Rental about $900. And the reason that that both workers who work in Disney World and stuff want to live here, because it's easy, it's maintenance free, and also the baby boomers want to live here, is because look at the facilities. Here you can see the condos. They're three-story walk-ups, but they're in absolute magnificent surroundings: lakes, clubhouses, gyms, pool facilities, etc. I mean, every area here has its own separate pool in terms of what is actually happening. So this is another development. This one here is slightly more affordable. It's closer to the airport in terms of there's massive industry that comes through. As I told you, 50 million people come through the airport. 2-bedroom, 2-bathroom, 810 square feet. Purchase price $55,000. Rent $810. And literally there's others for sale. So we picked this up on an auction, but there's actually an estate agent in the property that is selling some properties there that we went to look at, and for an exactly the same property, she was currently selling it in today's value at $83,500. Now let's say that she doesn't get $83,000. Let's say that she even gets 20% off that. Well, that's $16,000. That's still $67,000, and we're buying it for $55,000 in terms of where we actually are. Okay, just some questions here. Cornel, I've answered your question what they're looking for. Mark said, got it. Cornel said, I don't want stairs after retiring. Perfect, Cornel. Then you can buy ground floor apartments and ground floor condos, as they would call them. Mark says houses seem to have much better return than condos. Correct. Mark, it's interesting. You brought that up. Warren Buffett said single-family homes. He didn't say condos. So it's different strokes for different folks. The most important thing that's the difference between a single-family home and a condo is you also have to take into account the homeowners association. So there's a levy, you know, like a levy if you've got sectional title here in South Africa. And that definitely affects the return in terms of where you are. However, some people, some investors, some want condos, some want single-family homes. The purpose of this webinar is to explain the different options in terms of where you are. Teresa said, yet Warren Buffett recommends single-family homes. Well, that's exactly the same. So again, it's pros and cons. However, our partners on the ground in Orlando also have access to single-family homes, and you're generally looking at condos from $40,000 to $80,000, and you're looking at single-family homes in Orlando from about $80,000 to about $120,000. All I'm trying to do in this very short space of time is to show you some of the different options in terms of what is actually available. Okay. Interestingly enough, Neil has just posted here, Donald Trump says it is the best time to buy a house in the US ever. So just as a matter of interest, you might not believe me. Maybe I'm just some schmuck from South Africa who's not that old. But maybe Donald Trump and Warren Buffett know a thing or two. And both of them are telling you that it's the best time to actually get involved. This here is an even more affordable one. It's in an area called Winter Park. It's a 1-bedroom, 1-bathroom. Purchase price $44,900. Rent $650. Sold in 2006 for $77,000. So it just gives you an idea of the type of properties that are available. And then lastly, New York. Good old New York, the city that never sleeps, the Big Apple. I lived in London for 9 years. And for me, New York is just the same as London. It's a big city. It's a thriving city. It's the financial capital. Everyone comes to the financial capital to make their fortune, to find their jobs. And not everyone is investment bankers. Someone has to be the taxis, drive the taxis. Someone has to be the teacher. Someone has to be the fireman. Someone has to be the policeman. They are what we focus on in terms of the secondary market. And for me, what you're looking at is that if you're looking at property in Manhattan, you're looking at about $3,000 a square foot. If you're looking at property in New Jersey, which is literally just over the river, it's like, no, I'm really not joking, it's one stop on the tube, basically. It takes 6 minutes. And it depends where you're going, so be conservative and say 20 minutes, okay? But from the city center, from the center of Manhattan, the World Trade Center, or even from Penn Station, which is right there, it's the main station in terms of where you're actually looking at. You're looking at literally like 10 to 20 minutes, basically, in New Jersey. And this is where average America lives and then commutes into Manhattan. Funny enough, they call them the bridge and tunnel people because they either go on a tunnel on the tube or they go over in their car on the bridge. But they're the people that you are looking to rent to. Now, the disadvantages of New York. The properties are old. They were built 80 years ago. Just like in London, they're old. They need to be renovated. The advantages of New York are exactly the same as London. You can't build stuff. You know, in Phoenix, they can go and build more houses. There's lots of land. It's a desert. But in New York, you have to knock a house down to build another one, basically, in terms of where you actually are. So these are what they call multi-family residential. And this particular one here that I'm showing you is what they call a 3-family multi-residential. You get just 2 stories and you get up to 4. A 2-family residential, you're looking at about $120,000. A 3 multi-family, you're looking at $200,000. A 4 multi-family, you're looking at $250,000. You can rent them. You rent them out individually. They're like individual apartments that you rent out. And you're looking at renting them between $1,000 and $1,200 per family. So that helps you work out the yield. And if you're not convinced what an Australian fund has done. Now, I've been involved in Australia for a long time, and they have amazing compliance and due diligence and everything. And on the Australian Stock Exchange, they raised $100 million in October 2011. And since November 2011, they have bought 130 of these properties. And they've only focused on New York, and they've only focused on New Jersey because they believe there's true value here. They buy up houses on repossessed, on auction. They renovate them through a partner of ours called Glenn, and then they rent them out to families. And there's significant demand for good quality accommodation close to their place of work in New York in terms of where you actually are. And these are the type of properties that you're getting. One quick thing. If you go over 4 properties, then you've got to be very careful because then you start getting into rent restrictions, etc., etc. So 4 is the magical number. You can go up to 4, and it's seen as a commercial. They call it a commercial building, but it's residential. But over 4, then you get rent control problems, etc., etc. So you need to be very careful. There's a specific reason that fund is only focusing on 2 to 4 multifamily units in terms of where you actually are. Neil says there's high insurance. Needs of paint, tenants sue their owners, high insurance, etc. Well, to be honest, Neil, it's interesting. It comes back to cash flow. But again, I've done a lot of work in Australia. The guys do amazing due diligence, and for them to have raised that type of capital, to have bought 130 properties, and to be showing significant returns on what they're doing, it's certainly a market that I'm very interested in. And at the end of the day, New York is the financial capital of America in terms of where you actually are. Mark Luminar said 100 to 130 is quite expensive. 100%, Mark. It's no different to London. You're getting lower yields based on the rental in New York than you're going to get in Atlanta or Memphis. It's the same. It's the same as England. It's the same as Sydney in Australia. The bottom line is, if you want to buy a prime property, in the heart of America, right, in New York, then you're not going to get quite the same yields. But it's a very attractive investment. And interesting enough, in New York, the market never lost 1%. The market never lost 1%. The market has stayed stable right through the global financial crisis. And the only reason that you're getting these on value is because you're picking them up at auction. You're buying them off distressed sellers in terms of where you actually are. Cornel says maintenance will probably be quite high due to the age. You're right, Cornel. I mean, properties I looked at were anything from 60 to 80 years old. But before we put the tenants in, we do a full renovation. We get them right up to full spec in terms of where you actually are in terms of what you're looking for, in terms of how you actually do it. So, guys, it's different strokes for different folks. You know, some people like to buy prime property. Others would like to go to an area like Memphis where they're getting a better rental yield. It's different strokes for different folks. I'm trying to show you the different pros and cons of both investments. Mark says, only trouble is that there's no lending gearing possible, so my cash will not last long as compared to geared deals. When do the local guys think the banks will lend again, especially to foreign investors? Mark, the greatest opportunity in America right now, and the reason it's the greatest wealth transfer ever, is because Americans have been repossessed of their homes. Their market has been devastated. They not only are psychologically buggered and don't want to get in the market, they also can't borrow from their banks. And because of that, people from New Zealand, Australia, Sweden, Israel, South Africa are piling into America and buying assets at very low values. And there is a massive wealth transfer taking place. And that is why people like Donald Trump and Warren Buffett are talking about it. Wall Street has moved on to Main Street. And the market is only going to recover when the banks start lending to the man in the street. Forget about foreign nationals. They're not lending to the man in the street in America. And when they start lending to the man in the street, that is when the market will recover. And to be honest, from my perspective, from all the research that Neil, Brendan, and I found, you're looking at least, generally people can't say, but they say anywhere from a year to 2 years. That's the window of opportunity. It's not a case of this is going to last forever. The opportunity is there now. And you need to use your cash. And what people are doing is they are using cash to necessarily churn and flip and create more value in terms of what they're doing. And I can get into that in terms of more information if you are interested. But the most important thing is that, yes, gearing is not available. If you want to, you can use a thing called hard money. It's private lending. It's anything from 11 to 20%. We would only recommend that if you're doing a buy to flip, literally on a two-month hold. But what most South Africans are looking at is actually remortgaging property here, like Brendan did, taking money overseas, because you're borrowing it at 10, 11% here, and your yield on that side is more than covering your expenses, and you've got yourself a great value asset overseas in terms of where you're looking at. Okay, Neil said Phoenix, Vegas, Atlanta, Orlando, and Memphis give better returns, 100%, and I don't dispute that. Again, different strokes for different folks. It's like saying that Sydney doesn't give you as good a return as some medium-sized town or whatever. The prime locations around the world, because they're blue chip, just like a commercial property, don't necessarily give you as good a yields. But people want the blue chip in terms of where they actually are. Okay, so let me keep going in terms of where we actually are, just to show you some single family, some multi-family units. This was another one in New Jersey and another one there. You can just see the look and feel. I think these are lovely looking properties. This was one of the Australian fund properties here on the left. You can see my mouse in terms of where they are. They bought it, they renovated it, they rented out, and as you can imagine, that commands a great rental in terms of where they are. Just to show you, here is a 4-family unit in terms of where you actually are. So this was a property that we went in and looked at. Now this was quite a big purchase. You're looking at $300,000 to purchase it. The renovation this year was Glenn. He's been in the industry. Literally, he left school and went straight into construction, and he reckoned that we were looking at about $75,000 to renovate the entire building. You're looking at renting out a 1-bed for $1,000 and a 2-bed for anywhere from $1,200 to $1,500. So on this property where you've got 1-bed and 3 2-beds, you're looking at a conservative return of around $4,900 per month. And then lastly, for those of you that are not interested in renovations or maintenance or anything, here's a perfectly solid brick building. And actually there's an investor here that has got himself into some trouble, and he's got 4 1-bed condos. Generally they're at 465 square feet, so roughly 46 square meters. The purchase price is $65,000 each. He will do a bulk discount if someone wants to buy 4, and the rent that he's commanding at the moment, so these are actual existing rents, is $800. Now I've got the full breakdown with regards to all 4 of the properties and what is available in terms of where you are. So that really explains to you why I'm extremely happy, and really for me it tells you about the story and the replacement value. The last thing that I wanted to just show, and some people have already been talking about it, is just comparing what you're getting in South Africa. Now, I did send you this document, so I'm not going to spend a lot of time on it. But I went on private property. I found a house in President Park, Midrand, a 5-bedroom house for 1.35 million. It's got a full description. Funny enough, this property is also at a discount at what it was 8 years ago. And again, this document is available on our website, or you can ask me. I can email it to you. The same thing on private property is renting for 7,000 Rand a month. And if you compare it to that 5-bedroom house I showed you in Atlanta, that house that you're looking at there, you basically, if you do a comparison between the two, they're both 5-bedroom houses. The one's in Midrand, the one's in Atlanta. The one in South Africa you're buying for 1.3 million. The one in America you're buying for 1.08 million. The one in South Africa you're renting for 7,000 a month. The one in America you're renting for 12,000. The one in South Africa you're getting a 6% yield. The one in America you're getting a 13% yield. The one in South Africa you're getting a 15% discount. The one in America you're getting a 54% discount in terms of where you actually are. So for me, these numbers are very, very, very important, because I realized that you can actually get better value in America than you can in South Africa in terms of where you actually are. And someone's saying here, Cape Town. I didn't even go to Cape Town because we know that Cape Town is more expensive. The other thing that you've got to look at is that the Rand to the dollar, the Rand is devalued against the dollar by 6.9% over the last 20 years. This is just some indications in terms of where the dollar is. We all know it's around 8 Rand to the dollar at the moment. But here's some indications on terms of where the currency people think it's going to go. And it's going to go anywhere from between $11 to $22. So now you buy yourself a great investment in a first world economy with a first world income. And if the Rand devalues, you only see upside. Not only do you see upside in terms of your cash flow, but you also see upside in terms of your returns. And again, I can show you all of that in terms of your cash flow and how you put it into account. But I think most of us will agree that in the long term, the Rand will continue to devalue against the dollar. Now, the second thing for me that is very, very important is the timing. And what a lot of people often in property is that they focus on this part of the curve and the fact that there's been a big drop, and they don't focus on the long term. And I personally, from my experience, most of the millionaires that I've met that have made their money in property made it during crashes. Most of the very wealthy English people I know that made it in property made it between 1991 and 1993. Most of the South Africans made it between 1998 and 2002. And I believe that we've got the perfect storm here again in America, so that where you don't focus on this, you focus on the big picture in terms of the timing. And the market has literally it's at this peak here. It maybe even last year was where the trough was. And only in hindsight can you ever call the trough. But it's definitely on the uptick from everyone we spoke to, including Warren Buffett, including Donald Trump, and all the press in terms of where you are. And here's just some press articles. You can see after tough 2011, house prices are up sharply. The market may have gained velocity to pull itself off the bottom. So this was an article that literally was in the newspaper. This is another one in the Arizona Republic. Valley home prices on the upswing. Here's another one in the Wall Street Journal. This was an article I got while I was there. Stunned home buyers find the bidding wars are back. What are the bidding wars? It's because there's so lack of supply that so many people are trying to buy property that even though they only want to sell the property, they put it on the market for 100,000. Someone else offers 102. Someone else offers 105. And just to show you this graph, and I know it's terrible quality, but it's out of the newspaper. This is about supply and the inventory. And you can see in 2002, there were about 2 million homes in terms of the inventory for sale at any one time. During the peak, it got up as many as 4 million. And interestingly enough, you can see in 2012, we're getting back to where it was in 2000 in terms of the numbers. So very, very important to understand these numbers as a sophisticated investor so that you can make wise decisions. And interesting enough, when we were there with Dolf, this was another article I got. Prices of homes in the Valley in Phoenix are up 20%. Dolf reckons that in some suburbs in Arizona, in Phoenix, have increased this year by 10% a month. Think about that, 10% a month. It is crazy in terms of the demand. And the last thing for me that really excited me was the partners. I told you in 2010 I went there. I was devastated by the quality of the partners and the fact that they would do anything to make a sale. But for me, property is all about, you can either do it on your own or you can work together. You can use nature's laws. Birds that fly in a flock save 20% of their energy. Flocks can fly 5 kilometers an hour faster than those that fly alone. And lastly, flocks that fly, with 25 birds versus one bird can fly 70% further. And my thing that I was hugely impressed by when we were there was our partners on the ground. Most of them were in their late 50s. They had more than 30 years experience. This is all they do. This is all they know how. They know how to buy great properties. They know how to renovate them. And they are really, really taking advantage of the market. And most of them have full turnkey solutions. And as I said to you, it's come through a huge amount of long-term work and relationships on our side so that we could find the right people on the ground, the right people that could provide the right products to you so that you could take advantage of this opportunity and not be one of the many people that are sold fraudulent and rubbish that is being sold in terms of where you actually are. I believe there's 8 reasons that you should look to invest in America. And just to go through them quickly, it's a mature first world market. I've spoken about it. It's a sophisticated market. It's a highly developed country with first world communications, finance, and property sector. And it's also got a wonderful entrepreneurial element to it. The risks are minimized and the opportunities are easier to see and benefit from. There's a common language. English is their spoken language. It's a lot easier to do business there than necessarily in some European countries where you can't necessarily speak the language. It's got well-developed property laws. Unlike a place like Cyprus, where the EU is getting involved because there's huge problems with the deeds office and whether you actually own the property or not, and literally there's a huge amount of research on the huge chaos that is happening in Cyprus and the deeds office and the property laws. But America has very well sophisticated property laws. It's well established. It's got enormous size. There's 10 million square kilometers, 307 million people. It's the 3rd largest country in the world. It generates a GDP of 14 trillion, the highest in the world, and it represents 23% of the world's wealth. But the thing I found most interesting is that it's hugely different in terms of geography and where you go. And because of that, there's a huge diversity of people and huge diversity and range of investment opportunities, from inner city condos right through to holiday properties, ranches, and in rural areas. And I've just tried to give you an idea of some of the stuff that we looked at. It's easy to buy and sell. As I explained to you, they've got an extremely efficient system there where you can literally buy and sell a property in 4 days in terms of how you are actually looking. It's easy to visit. Literally, it's a little bit tougher for us South Africans, but you can go, you can get a visa. I know that Brendan has a 10-year visa, and I think Neil has a 5-year visa, so they can go in and out all the time. It's not that difficult to get a visa to both go on holiday and to work. It's low tax with generous allowable expenses. The tax regime in the US is generous to business owners. Tax rates are lower and allowable expenses are much greater than what we've got here in South Africa. So it is tax efficient. And again, there's not enough time to go into that in detail, but it's something to understand. And then lastly, it's the perfect investment profile. It's got low risk. I've explained to you the tenant demand and what is happening there, but it's also got high reward in terms of where you are actually looking. Now, the question that I've been asked, and I've only been home 4 or 5 days, but every person I've spoken to, they said it sounds too good to be true. What are the risks? If it sounds too good to be true, it often is too good to be true. What's the scam? What are the risks? And I'll be honest with you, with our experience of helping over 2,000 people invest internationally to a value of 1.6 billion, I've been investing myself since the age of 22. That is where I believe I bring my experience to the table, because I go over there. In fact, Brendan actually told me that I'm too negative because I'm constantly coming up with negative reasons. I'm constantly trying to shoot holes in every business plan. But you have to as an investor, because as my uncle said, my uncle's a very successful stockbroker and asset manager. And he always said to me, Scott, what is the worst case scenario? And if you can manage the worst case scenario, then everything else is upside. And so for me, there's 3. There's 3 worst case scenarios. The first one is currency. What happens if America loses the world currency, the US dollar? What happens if China's yuan takes over? And I actually met with a friend of mine who we went to university together. He's now a Wall Street banker at UBS. And he sat with us and he said, Scott, it's never going to happen. Firstly, China's too regulated, and there's no ways the world currency will work within such a regulated environment. And secondly, China has categorically come out and said they do not want it, because if they did, their currency would increase in value by over 30%, and it would wipe out their industry. So I believe that I can cross that one off. The second one is tenants. What happens? Any business, the market falls over if the tenants are not paying my rent, or if there are no tenants. Like in Dubai, there were great discounts and everything else, but there were no tenants. In Manchester, there were fantastic opportunities, but there were no tenants. And even in America, when I was in Vegas in 2010, fantastic opportunities, but no tenants. But interestingly now, I've explained the rental demand, and I believe the only way that the tenants would disappear is firstly if there's an atomic bomb, and secondly, if there was a massive drop in interest rates. If there was a massive drop in interest rates and suddenly all the tenants could go to the banks and borrow money and buy homes. But there's a bit of a problem. Interest rates are currently 0.25%. So how on earth are interest rates going to drop? And there's only one other risk that I see. And that's what happens if interest rates go up. Because to be fair, if interest rates are 0.25%, when the banks start lending, when the Federal Reserve starts putting up interest rates, which they will, there's a problem. Because if you take out a mortgage and you're exposed and these numbers only work, at a very low mortgage rate, well, then you could be exposed and you too could lose your T-shirt. But the beauty here is that you're a cash buyer. You're making this investment based on principles of cash, and only later, if financing becomes available, or more like when financing becomes available, will you look to remortgage. But for now, you are completely mitigating those three risks in terms of where you actually are. Cornel has asked, has Vegas changed yet? Interesting enough, Cornel, Dr. Dolf, Roos, one of the most sophisticated investors worldwide, he wrote the book Real Estate Riches. He says that the two biggest growing markets are Phoenix and Vegas, and that is where the best demand is in terms of what is happening. So again, there's different things in terms of different areas and what you're looking. Neil's actually said something very important. The biggest risk is actually convincing yourself that it's too good to be true and not taking advantage of the greatest wealth transfer in our lifetime. And that's not my opinion. That's Warren Buffett and Donald Trump's opinion. So the question is, let us teach you how to kick the door down on American investment. America seems like a long way away. It seems like a difficult thing to do. How are we going to do it? How are we going to get involved? How are we actually going to get in? And here you've got one of our partners kicking the door in. And really, from my perspective, the very first point of view is actually about the partners. You can see here is a picture. The guy's name is RJ. He's been in the business for 30 years. He literally he owns a couple of hundred properties in his lifetime. What he does is he buys them at auction, he renovates them, and he either holds them or sells them. And this was us. I was sitting right next to him in the car, and this was his list. He literally had over 300 properties that he had got through various off-market opportunities, and they were going to auction on the Tuesday morning. It was a Saturday. He's the biggest con I've ever met in my life. And Neil, myself, and Brendan in the car, he's literally driving around looking at these properties. But believe it or not only is he doing it, 6 other people who work for him are driving around other suburbs also looking at properties so that they can evaluate them for auctions come Tuesday. Now, are these not the type of partners that you want to be dealing with? Sophisticated, intelligent, but most importantly, savvy, street smart people. And they are the best of breed partners. And that's what we pride ourselves on, is working with best of breed partners so that you can get and take access to the best properties. This guy here, Jim, he runs one of the most efficient management companies I've ever heard of. He not only manages over 1,100 units in Memphis, so to answer the questions of the people asking about demand, Jim manages 1,100 properties in Memphis, and he gave us the demand, the statistics, the yields, the numbers. You can actually see his board there with all the different properties. But interesting enough, he's been in the game over 30 years. He's got such a sophisticated thing. He's got in his same building, you can come and cash in your checks. Do you know that less than 40% of Americans, 40% of Americans don't have bank accounts? It's unbelievable. So they get their salary check, they go and cash it in. He will cash it in for you. He'll pay your rates and your services and your electricity and water. He'll take your rent off you. I mean, how great's that? As the management agent, you've got the money off the guy before you can do anything with it. And then he sells you second-hand furniture, etc., etc., etc. All the value adds that he adds on. But again, a best-of-breed partner that he knows what's doing. Now, I wanted to just tell you the story. And we were literally with RJ, and we were driving around, and we looked at about 25 homes in the space of about 3/4 of a day. He had about 300 homes to look at over the space of about 5 or 6 days. Himself and his partners had equally a number of properties. And what actually he does is he doesn't waste his time. He has a spotter that goes out, they check it, they give him an update, and then he only goes and looks at the really good ones. So, I mean, there's such an amazing filtering process to find the right properties. But my question to you is, does this look like a nice house? I mean, look how nice this house is. Now, this house is on bank auction, and it's coming up to auction on Tuesday, and it's just like in South Africa. It's sight unseen, foot toots, you buy it on auction, and you get whatever you want. And interestingly enough, you know, basically, RJ said there's absolutely no ways. He said if it's his money, then he is definitely getting inside that house, because he needs to make sure that this house is something that he wants to invest in. And so I want to show you a quick video, basically, to the lengths that our partners go to actually get into the house. This is RJ. He's literally trying to get in here, and you know, with a set of keys. The banks don't give you access to these properties. It's a real problem. And for those of you that've got slow internet, I will actually send you this video. But you can see he's trying to get in. He's trying to hoik it now. Now, you might say to me, well, this is a bit dodgy, Scott. You know, what the hell's going on? But I want to show you this because it's very important to explain, because this is your money. This is your investment. Do you want someone on the ground like this looking after your money, or do you want some Nancy-pantsy estate agent who's in a suit who's just going to sell you shit? And let me explain to you. He's going around now. He's trying to get in the garage. He's trying to check this house out. He's trying to understand, is there opportunity in this house? This man gets into the house within 2 minutes. With his experience, he walks around. Carpets need to be done. Kitchen cupboards need to be done. Need to lick up paint. Need to put in window fans. Need to redo doors. Need to change bathrooms. He adds it all up in the space of literally 2 minutes, walks out, talks in his phone, and we're back in the car. Right, let's move. Let's go. Let's get on to the next property. We've got lots of properties to see. This man, he's 57 years old. He's not taking shit from anyone. He's not waiting for anyone. He's only interested in finding good investment opportunities. And that's what it's all about. This is a best-of-breed property, and that's how you kick the door down to get into America. This is him basically going through the property here. Now, the interesting thing is, you're going to say, well, that's slightly dodgy, Scott. Well, is it? Because to be honest, look at this house. I just showed you this pretty picture. Sorry, let me just show you this pretty picture again and just remind you. This is this house. Look how lovely and pretty this picture is. Well, we saw another thing, because when we went inside, the tenants, or not the tenants, the owners trashed the place. They're upset. The bank has repossessed their house. They're pissed off, basically. It is unbelievable that someone could trash a house so badly and leave so much shit lying around. They've smashed the kitchen. They've smashed the walls. They've left all their furniture. Look at the walls there. Look at all the holes in the walls. We now go across to the kitchen. The kitchen's absolutely filthy. There's literally food on the floor. The kitchen and everything. He looks under the sink. I mean, look at all this crap that's lying there. And he says to us, just to renovate this property, just to collect all the crap that is in this property would cost about $10,000. Now, my question is, would you like a surprise like that? You've gone and bought that property, you've done all your numbers, and suddenly you get a surprise for $10,000. I know I certainly am not interested. And when you look at properties like this, you can understand why our partners go to such great detail to actually get into the property in terms of where you actually are. So the other thing that's very interesting is that they do what they call rent to own. So a lot of people in America have bad credit, almost everyone. And basically doing a credit check no longer counts. So they do what they call rent to own. Now, interestingly enough, they put them on a 3-year contract, and he says to us, Scott, you know, with all due respect, 99% of them will never buy that house. But the nice thing is that psychologically, it gets them in the house, and psychologically, because they think they're buying it, they look after the house. Now, that's streetwise knowledge, and you want people on the ground that are going to do that. They're going to rent out your house, and they're going to find tenants that are going to look after your house in terms of where you are. So we've spoken about how important it is to get inside. I've spoken about the market knowledge and just understanding the market and the type of thing that you need to do in terms of putting up the boards. But there's two parts. The first part is partners. The second part is information. Look at a place like Detroit. Do you know, this was actually a picture here that we saw of some properties. But apparently Detroit, they've closed down entire sections of the city. Someone said to us, you can buy a great investment, but it might be in a war zone, and literally you've still got a property in a war zone. And to answer your question, Cornel, this was one of the areas we drove through in Memphis. But interesting enough, entire sections of Detroit are like this. So you've got to have the right partners on the ground to be able to avoid this. This is an entire complex that has been literally boarded up. And I wanted to show you another quick little video, if you just give me 2 seconds here, of boarded up houses. You can see we're driving around here. And again, I know that video doesn't work so well on webinars, so I will send it to you. But take a look here. We're driving up. There's a completely boarded up house. And then you look around there and there's an entire boarded up development. Now you need the right partners on the ground with the right information, because you sure as shit don't want to be buying this property, even in this area, the suburb, or anything along those lines. Because, you know, so you've got to have the right partners, you've got to have the right information in terms of where you are. You've got to be careful with the rental market. We looked at some stuff in Phoenix and we drove around, and Dolf showed us some of the bad areas. And literally, you know, these signs, we went down one road and every single building was trying to do this. First month rent, you know, giving special discounts, now renting. But how do you give a special discount if your neighbors are all doing a special discount as well? So again, it's about having the partners on the ground. Dolph's been investing in Phoenix for decades. He knows where the good properties are that you need to be buying. What about off-plan? I want to show you a very interesting thing. I know there's a number of projects that are being marketed here in South Africa, and I asked Dolf, I said, tell us about off-plan and whether you'd be investing in off-plan developments. And, you know, they often come with EB5, which is green cards. Let's listen to what he's got to say.
Right. No one's building at the moment because right now you can buy stock, you can buy housing and commercial buildings for less than the combined cost of the land and the building materials and the labor to put it all together. So that means there have been few building permits issued, nothing's been built. The population's still been going up. How's that possible? How can the population be increasing and no new houses being built? Well, people are living with their in-laws and probably their outlaws and all that. They've got more people per home and all that. They're getting married, but they're still staying at home before they venture out on their own. So there's pent-up demand or latent demand. The bubble's going to burst at some stage, and there's going to be a big, huge increase in building permits issued and houses being built. But in the meantime, it is cheaper to buy existing stock than to build something new. So, you know, I wouldn't venture there. I don't know why anyone would consider building right now when existing stock is so cheap, but it's all going to turn around.
But on that note, I mean, there's schemes out there where you can get an EB5, and which is effectively a green card,
right,
because you're helping a developer build a development in an area that has no growth, and they're trying to provide jobs.
That's true. You can get an EB5 that way, but you can get an EB5 visa also by investing in a business or just by investing in existing real estate. So you don't have to buy into a development to get the visa. You can buy existing stock if that is your...
I'll be honest with you, what Dolf de Roos is saying here, and it is coming through slightly, is he says that why would anyone in their right mind buy a new development when you can buy a existing property at 50% the price? He then went on to say that why buy EB5 in a new development when literally you can get an EB5 if you invest in the right structure and buy the right type of properties, which he's actually going to help our investors do. So if you want to look at that and you want to go the EB5 route, well, Dolf can actually assist you with regards to doing that. But for those of you who are interested, I will email this to you. I'll put it on YouTube. Go and look for Dolf de Roos, new developments, and EB5, and you'll actually find it. Because literally, as Dolf de Roos said, he certainly wouldn't be buying new developments right now, and he certainly wouldn't be buying them when he can buy great properties at 50% less than a new development can even be built and come out of the ground. And that, you know, the whole allure of EB5 doesn't make sense either, because you're buying a bad investment when you can buy a good investment and get EB5 in terms of where you actually are. What is your process for selecting your partners? Great question, Gregory. My process is 15 years of experience. 15 years of experience of both going through the ups and the downs, making mistakes myself, and unfortunately in some cases even making mistakes on behalf of IPS and my company. However, no one's perfect, and we've learned from that. And so what we do is we work on experience. We work through relationships. All these partners that we've worked with and found on the ground came through a relationship that I've known with a chartered accountant, and a guy that's invested 1,100 properties in America over the last 6 years. Now, in my opinion, that is someone who has the right to be able to sound intelligent. We met his partners, and they were all brilliant. They'd all had over 30 years experience. That's all they did. They lived, eat, and breathed property. Dolf, he's the #1 real estate author and investor internationally worldwide. He's the author of Real Estate Investor magazine. And really, from that perspective, I don't think you could ask for a better person. Neil Peterson actually brought Dolf out to South Africa in 2008. I shared a stage with Dolf, and we taught South Africans about both local and offshore investing. And Neil arranged for us to meet with him. We spent a day and a half with Dolf. Now, who better to learn from, and who better to partner with people like that, with RJ, with Jim, with Charles, who's been in the game for 30 years, with Ray, with Jeff, with Glenn, who's in New York and been there for 30 years. But they are all specific to certain areas, as you can see. And so we've got the right partners in the right areas. I've spoken about EB5, and you mustn't be lured into buying a bad investment to get EB5 when you can get a good investment and get EB5 in terms of where you are. Just quickly running through some of the concerns, and I know that I've taken up a lot of time here. Sorry I get so passionate about this because there's just so much information to share. I want to go to America and choose the right investment. Well, firstly, good luck to you, and I'm glad Gregory asked me that question. You know, at the end of the day, I've been doing this for a very long time. I'd say one of my greatest skills is being able to find the partners on the ground. So go to America if you want to. Good luck. It's a massive market. There is opportunity, but I have a perception that you'll probably take quite a good hiding. However, if you want to work with us and you want to work with our partners, that's perfect. We can either help you you can sit on your bum in South Africa and we can help you, or you can get on an airplane and go over to America, and our guys on the ground will show you around and help you. I'm going to get onto what's next and teaching about it, but I mean, as an example, Dolf Roos is going to put on a property tour. For 1 week, you get to spend time with Dolf. He's going to take you around. He's going to show you the best investments. He's going to teach you everything he knows. He's going to introduce you to his partners so that you too can take advantage. But to be fair, you know, whether you want to go to America or not, we've got the partners on the ground to be able to help you. I'm worried about the management and maintenance of my investment. It's so far away. Everything that we do is an end-to-end solution. Every partner we found has an end-to-end solution. They specialize in helping international investors. That's why we partnered with them. So that management and maintenance is taken care of. And in most instances, the company that we're dealing with is the company that finds and buys the repossessed property, actually renovates the property, gives us a 1-year warranty, and then offers a management solution. So they basically have the management and maintenance covered in terms of where they are. What happens if my tenant doesn't pay my rent? How can I afford my mortgage? Well, with all due respect, you don't have a mortgage. But most importantly, we found sophisticated management agents to make sure that they vet the tenants, to make sure that they get the right tenants in, to make sure that you get paid. And that is why I'm interested in long-term trends, vacancies, and yields. How do I get a mortgage, and what happens if interest rates go up? Well, with all due respect, you can't get a mortgage. These are cash purchases. You need to think of them as cash purchases. The only way that you can get a mortgage is if you refinance property here in South Africa, you release equity, and you buy property over there. And one day when the market turns, you will be able to refinance, and at that point, the market will certainly be on an uptick, and you might want to refinance and buy another one, or who knows, it'll be up to you. If it's so good in America, why is it being marketed in South Africa? It's not being marketed in South Africa. They didn't come to South Africa. South Africa went to them. Neil, myself, and Brendan got on an airplane. We flew over there. As I said to you, we traveled 38,000 kilometers to go and find the best partners and the best investments. Why should I do it now? To be honest, I've told you, there's a 2-year window of opportunity. The market is picking up. The market is ticking. Dolf said to us, the market was better last year. You might have even missed the opportunity. But at the end of the day, what he means by the opportunity is the complete bottom of the market. But there's still a huge amount of opportunity. The rental yields are strong. There's still very good values. But I'll be honest with you, even if you wait 3 months, you might find that the opportunities I'm showing you tonight will not be as good. Because if Warren Buffett is behind it, if Donald Trump is behind it, if Dr. Dolf Roos is behind it, all three of them who have no vetted interest to come out and publicly say that you should be buying property, do you not think that the rest of the world is waking up? to these opportunities, including the American. Surely it's cheaper if I deal directly and I buy in America directly from an American. It might be. But to be honest, we don't work like that. We work with our partners. We split commissions with our partners because we add value. We've got the full solution on this side. They've got the full solution on that side. We add significant value to ourselves. So can you get on an airplane and fly over there and find the cheapest thing without us being involved? Probably. But to be honest, you'll probably buy a piece of shit as well. Because, you know, it's impossible. You can't fly from Cape Town to Johannesburg and spend a week there and expect to buy a good investment. Yet let alone take the entire size of America and expect to arrive, find the right partners, find the right property. So I would highly recommend that you work with the best in the business in terms of where they are. And then lastly, there are lots of companies. How do I choose? Well, we've got a free report. We've got a free report on the 6 things you have to know before you invest in property. Go to our website, ipsinvest.com, ipsinvest.com, and on the front page, you can literally click on it and download the free report. It's a completely vanilla report on all my years of experience and what I've learned to make sure that you don't join the ranks of 80% of South Africans that invest overseas actually lose money. And my question is, you know, if you are going to lose, what is your cost? How much is your time worth to you? How much is your money worth to you? We can help you. Read that free report. It's absolutely critical. A couple of headline items from our company. We've helped over 2,000 people invest internationally to a value of 1.6 billion. We only focus on international investment. We're not an estate agent that sells houses in Johannesburg and then tries to be clever and sell a house in London. All we do is international investment. We've got offices, not only locally, but internationally. We spend millions every single year on research. This trip alone just cost me easily 80,000 Rand. Flying over and actually going and doing this research. We've got best of breed partners. We pride ourselves in our partners. We've got a sophisticated IT platform. We've got an experienced after sales division to make sure, because it's not just about buying the property, it's managing the purchase process and making sure you've got a good tenant. We've got access to off-market opportunities. Just like I showed you with RJ, he's got properties that no one else has access to, and we've got access to that. And lastly, there's an organization worldwide that regulates international property investment. It's called the AIPP, the Association of International Property Professionals, and we were the first company to be invited. It's run out of London. We were the first South African company to be invited to actually join that organization. So we started in 2003. We focus on international investment. We specialize in London, Australia, and now America in terms of where we actually are. But what is the way forward? If you are slightly or remotely excited, there's 3 ways. You've got direct property. As I've said to you, it literally within 4 days, the property will transfer. So there's no such thing like South Africa where you sign the contract and then you transfer the money to the attorney and then you arrange finance, etc., etc. There's no such thing. You need to set up an LLC. It stands for a limited liability company. It's the vehicle that you need to own the property in. We met with a lawyer, we met with an accountant, and we met with Dr. Dolf de Roos. And again, I've got it on video of all 3 of them. All 3 of them agreed that an LLC is the best vehicle to own property. Not only does it protect you because America is a very litigious society, but also it is the best and most tax-efficient way. You then need to set up a tax number and you need to have a bank account. Now, without us, there's something called the Patriot Act. You need to get on an airplane and you need to fly to America because the Patriot Act does not allow you to set up any of the stuff without you being in America. However, because we specialize in international investment and because we've been doing this a long time and because we've got great partners, we can help you set all this up from your home, from your seat here in South Africa. We can set it all up for you. So the first step is you need to set up the LLC. We will help you get a tax number, and then we'll help you set up a bank account. You'll then send your money over to your bank account. Now, worst case scenario, you never buy a property. You still have an overseas bank account where you can hold foreign currency. You have an overseas credit card. And worst case scenario, you can buy stuff on iTunes and stuff that you can't using a South African credit card. We will then help you. We will understand. You'll fill in a questionnaire. We'll understand exactly what you're looking for, and then we will match opportunities to what you're looking for. We don't sell you property. We provide you solutions. That's what we do. And lastly, once you find that property, we provide you with an end-to-end solution. We help you manage the entire purchase process. We help you find the management agent. We hand you over. We help you manage the entire thing in terms of where you are. So that's how you can get involved in direct property in terms of how you actually are. Then we've got the property tour with Dolf, Dr. Dolf de Roos, one of the leading, if not the leading, spokesman and international investor in property. He wrote the book Real Estate Riches. It was part of the Rich Dad Poor Dad series. He's very well known in South Africa. He's very highly respected. He started international investment over 25 years ago, and he has offered to do a tour. We are going to be doing tours to America. You can spend a week with Dolf. We're going to go to New York. We're going to go to Phoenix. We're going to go to Las Vegas. We're going to go to the Grand Canyon. You're going to spend a week learning from the best, one of the best property minds in the business. And not only are you going to learn from him, but he's going to show you opportunities, and he's going to introduce you to his team. We're calling it the Big Five because you've literally got New York, Vegas, the Grand Canyon, you've got Dolf, and you've got property. You're going to have all his products included so that you can learn. And there's so much value and so much fun. But we're also going to have loads of fun. You know, Neil, Brendan, myself, we're all about fun. So if you're interested, contact us, and we can give you more details on that. And then lastly, we've got Wealth Migrate. What is Wealth Migrate? Wealth Migrate is the Groupon of property. If anyone knows what Groupon is, it's one of the most successful businesses launched in the last 3 years. It was launched in 2008, and it's expected to be the first company to go to $1 billion in sales faster than any other business. It's effectively collective buying power. This is not a property fund. This is collective buying power. If you're interested in it, we will be launching it. The closing date will be the end of June. One share, you'll be buying a share in a company. One share will be equal to $15,000. So if you've got 100,000 Rand, you can then participate. We personally will be investing our own money. There'll be very little fees up front, literally just costs to set the structure up, etc. We will only be benefiting in terms of a hurdle rate. So it holds us accountable. You will get all the return until an agreed return, and only then will we start to participate. So we are completely incentivized. It is completely, I believe, it's none of this crap like ShareMax or anything where they take all the fees up front. It is completely incentivized so that we are there to act on your behalf to get you the best returns. And we're going to have two different plans. We're going to have an income plan that focuses on yields, and we're going to have a growth plan that focuses on growth. And if you want more information on that, get hold of me. It's closing at the end of June. We don't have time. This market is not going to sit around. We are not waiting. We are getting actively involved. We're investing our capital. If you want to join us, great. So you've got three options: direct property, a property tour, and Wealth Migrate. But the most important thing is you need to take action. As Neil said, at the end of the day, there's huge opportunity. And one of the greatest risks that you actually have is that you miss this opportunity. And 10 years from now, you look back and you say, I wish. So take action. If you're interested in direct property, contact us. If you're interested in the property tour, contact us. If you're interested in Wealth Migrate, contact us in terms of where we actually are. From IPS's perspective, take control of tomorrow. We have the global knowledge, the local solutions, and the best of breed partners to provide you with a transparent solution to preserve and create real wealth, have a plan B, and peace of mind through international property. And if anyone's got any questions, we're going to now go to questions. You can see there, just before I start answering questions, you can see there all our contact details. There's our website, ipsinvest.com. There's my email, scott@ipsinvest.com. There's our telephone number. Yes, we have joined the modern era. If you want to download the IPS app, it's on iTunes. It's currently very heavy with Australian material, but it'll soon be updated with all the American stuff. There's our blog with all our research. You can not only research America, but there's about 22 other countries, both good and bad. We're a research company. We don't necessarily invest in that country, but we certainly research the market. Twitter, if you want to follow us. All our videos are on Picken09. It was the very first YouTube account I set up. It's actually IPS TV. All the videos are there. Every single partner we met, we have a video so that you can meet them, you can understand them, you can trust them. And then on Facebook, you can go to IPS Invest. You can follow us, and we will constantly, I'll be putting up those videos. I'll be putting up research. I'll be putting up everything that we find, and in terms of where we are, it'll keep you updated. Now, just some other things while I'm waiting for the questions to come through, and I can see that coming through thick and fast. Neil Peterson of Real Estate Investor Magazine is also holding a breakfast on Friday. There's 15 tickets available. If anyone is interested, they need to get hold of him in terms of where it actually is. The number is 021-674-5026. So that number is 021-674-5026. The tickets are 500 Rand, but because you're on this webinar and because you're a valued IPS client, Neil has allowed me to give away 15 tickets. So if you phone up, just say that you're phoning up from IPS and from the webinar, and you'll get them for free. 500 Rands worth of value. Thank you very much, Neil, for passing on that great value to our clients in terms of where we actually are. Then IPS is actually hosting our own breakfast on the 15th. We've got our own breakfast. It's at the Bryanston Country Club, where we'll be focusing just on American properties. A lot of the material you've been through tonight will be repeated, but if you want to come and sit, chat, if you want to meet with me personally, if you want to meet with Kristen and the rest of the team, we can go through it, we can analyze it, and most importantly, if you're interested, we can get you started, because these opportunities are not going to last for long in terms of where you actually are. So I think that gives us the update. Oh, and one last thing Neil's pointed out to me as well. Real Estate Investor Magazine. Neil was there with me. We shared fun. We shared experiences. We shared a few beers, maybe a few more than a few. But anyway, we had lots of fun. But we also were both blown away by the opportunities in America. And Neil has put together a 10-page spread on all the information, the research, not just from what we found, but what from his reporters have found as well. And that will be in the June edition of the Real Estate Investor Magazine. So get the June edition. It's the front page story. If I stand to be corrected, Dr. Dolf Roos is the key investor as well. So you can go, and if you go to the website www.remag, so that's REIMAG.co.za, you can go there, and you can. The nice thing nowadays is that you can get it in hard copy, or you can get it in digital, and you can see all the videos that we made. And to be fair, we made a hell of a lot of videos, but you know, if you're interested in investing in America and you want to do your due diligence, well, we've certainly got our availability in terms of helping you. So there's a couple of questions here. I've got one that's come through from John, and he says, why an LLC specifically? John, to be honest, there's not enough time tonight to go into it in a huge amount of detail, but just put it this way. It's an efficient way to protect yourself. It's the most efficient way from a tax perspective in terms of actually owning the property, and you can have an offshore trust so that the shares of the LLC are registered in your trust. So from a South African perspective, you can also protect yourself, which is very interesting. So we met with the top partners, lawyers, accountants, and Dr. Dolf Roos, and they all recommended that that's the way to go. What are the costs in terms of getting started? Contact IPS. We've got a number of different packages, silver, gold, and platinum. We need to understand what it is you're looking for, and once we understand what you're looking for, we can help you get started on the road. Peter said to me, would we have to submit audited annual returns with the LLC? Yes, you'll have to apply for tax. We will help you do that. We've got accountants that will help you set up. In fact, we've actually got an online accounting system, so you can do it. It's really easy. It literally costs $100 or $200 a year, but you will have to submit tax returns in terms of where you are. Why is this so similar to a partnership? Kamal has asked me this. I'm not really sure what that question means, but I'm not sure. I've just been told that we've done our research and the LLC is the best way to do it. Then from a tax perspective, Samantha's asked me, each year, how does one apply for a tax number in America? So we will help you. You will apply for a tax number both in your personal name and in the name of your LLC, and IPS will actually help you. We've got the partners that will help you do that in terms of what you're doing, in terms of where you are. Pete Van Tonda asked, as a property owner, do I qualify for residence in the U.S.? If not, what rights do I have as a landowner in the U.S.? I've heard that different people get green cards and others don't. What is this whole EB5 that you've been talking about? As I said to you, it's buying a property straight away doesn't necessarily guarantee you. Basically what an EB5 is that the government wanted in 2010 to stimulate foreign investment. They said, right, anyone that invests more than $500,000 in something that's going to stimulate investments in hard-hit areas and create 10 or more jobs, then they'll give away a green card. So it was stimulating investments. Now, unfortunately, most of those areas are the most worstly hit property markets, and so you might be getting a green card, but don't kid yourself that you're getting a good investment. However, what really interests me, and I know Neil and Brendan were very excited about this, Dolf has a way to be able to help people invest in good properties, invest more than $500,000, get great returns, and get your EB5 in terms of where you're actually looking at, in terms of what you're actually doing. Okay, then Samuel said, when making profit on a sale in an LLC, can we hold the profit and immediately buy another property so that not to pay profit on the tax, or is the first property made straight one to the other? Now, to be honest, Samuel, I've read Rich Dad Poor Dad, I've read Real Estate Riches. I'm not going to sit here and try and act like an expert on tax in America. This is quite a new thing to me. I personally am only investing now for the first time. I'm very excited. I'm setting up my LLC. I'm getting started. I'm not missing this boat. But I don't know the answers to this, but we do have the partners. We've got the sophisticated accountants and lawyers to be able to help. And from what I remember with Real Estate Riches and Rich Dad Poor Dad, you can roll over the profit from the one property to the next. But we would need to take legal advice in terms of where you actually are. Okay, ladies and gentlemen, are there any more questions? Anything else that you think that you would like to know in terms of where you are? Peter said to me, how many members can you have in an LLC? And to be fair, you can actually you can have as many as you want. So it's quite similar to a CC in terms of where you actually are. So a closed corporation. I will be sending you an email. Someone's asked me, will you send me the links to the videos? I will send you an email, a follow-up email with all the links to the videos. But again, they are on YouTube. They are on Picken 09. There's a lot of videos, so just breeze through them, decide which ones you want. I don't know, we made a lot of videos, maybe 25 videos, so decide which ones you want. Philippa said, I'm based in the UK, not South Africa. Are you able to assist me in investing in the US? 100%, Philippa. At the end of the day, it's an international investment. Everything, to be honest, it doesn't matter whether you're in the UK or in Pofada. We can assist you. It's basically a simple step. We need to understand what you want to achieve, and then we can help you find solutions. So get hold of us. Let us know what you're looking to achieve, and then we can help you in terms of where you actually are. Mark says, must the LLC member be a natural person or a trust? Mark, I did answer that for you. It can be both. So it can be a natural person, or it can be your offshore investment trust. I have an offshore investment trust. Not sure if I should be telling you that publicly, but anyway, I do. And so my offshore investment trust will own the shares of my LLC. No worries. Hopefully it covered it for other people. Okay. Is there any other questions? I really apologize. I can see I've gone well over the time here. But as I said to you, I get too excited. There's too much opportunity, too much information to share. And really from our perspective, this is just the start. Neil's putting stuff in his magazine. IPS will be putting up a huge amount of research. We're working in conjunction with Neil, who's going to be one of our strategic, with Brendan, who's going to be one of our strategic partners. We are going to be doing more research. We are going to be doing more trips. We are going to be doing property tours. But most importantly, I am going to be investing as much money as I possibly can in this market, because I have never seen an opportunity like this based on yield. Forget capital growth, based on yield. And when the market recovers, which it will when the banks start lending at some point, then the capital growth will come. And that is the reason why Warren Buffett, Donald Trump, and Dr. Dolf Roos all say, now is the time. Now is the best time there has ever been to buy American property. Gregory has asked, will Groupon only be focused on US market? Very good question, Gregory. No, it won't. We are doing a similar structure in Australia at the moment. I've got a very sophisticated partner over there that owns commercial buildings. He's been in the game. He's actually an ex-South African. He's getting good returns. And so we'll be venturing into the commercial market. I've got seed capital investors from this side that are worth hundreds of millions, and we will be vetting the properties based on their experience. They've made their money in property here in South Africa, and we'll be working with them. So the idea is to start on the commercial side in Australia and the residential side in America, and then we'll roll it out across the world as the opportunities arise. Right, Neil has mentioned there will be opportunity as well. We've got some nice giveaways from Dolf Roos. on DVD and download of courses on how to invest in America. You know, I actually bought that course about 3 years ago when he was out here in 2008, and it didn't mean a lot to me because the market's quite different over there. You know, it didn't help me as much in South Africa, but now it does. You know, now REOs and notes and buying and holding and buying and flipping and all the terminology in America, now it's vital because we are going into this market and we're going into it heavily. Yaku said, thank you, Scott, for the big opportunity. It's a pleasure, Yaku. I hope you enjoyed it, and I hope that you enjoyed hearing and learning all the stuff. Ashraf said, thank you guys for doing this kind of research and sharing with us so that we can make up our own minds. There definitely is opportunity in America, and I look forward to the updates. Perfectly, guys. Well, listen, as I said to you, join us, join Warren Buffett, join Donald Trump, join Dr. Dolf the Roos. Come to America, whether it's physically or with your money. But the bottom line is, don't miss out on this opportunity. It's been an honor and a privilege to share with you. Sorry for taking so much time, but as you can see, there's so much information, and I do believe you needed to know it so that you can make the right, educated, and informed decisions about your future. Good luck, have a fantastic evening, and most importantly, create the life that you want. Go out there, take action. Good night.